Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, May 4th, 2023. It's now 5:28 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy set up one count. And to negate that for end of day today on the 4th, there must be a close above 4169.48 for the price flip to the sell setup count 1. And as you can see, there's been nothing but price flips to buy and sell setup counts since March 1st over here when this buy setup 9 end count printed. And price closed below the cloud conversion line once again. It was very good support the other day on the 2nd, and price closed right on it basically. And the price for the conversion line to start the day today on the 4th is at 4118.13. And price in the pre-market hours for the S&P 500 at 5:33 a.m. on the 4th is 40.86. And the only level in danger of becoming qualified for today is the 50% propulsion momentum up with a close above that level at end of day today on the 4th. There's a new supply line here at 4186.64, along with the original one that's at 4191.30 to start the day for the 4th, and closes above those levels will qualify these supply lines. And the previous supply line that was disqualified has now been canceled with the new one. And price subsequently went back under where it ended. We'll show that for a moment. And here's the canceled supply line there. And you can see that price went under it after qualifying it just about. And it did not get qualified, but it's canceled anyway. And price subsequently moved lower than where it ended up. And we have the new supply line here. And the ongoing demand lines level for today on the 4th, it starts out at 4087.20. And price would need to open under that level of 4087.20 to get that qualified. And of course, it would have to close under it also. If it opens above it and then subsequently moves under that level, 4087.20, then that line will become disqualified. So there's plenty of support around that level with that ongoing demand line, the cloud base line, the Stark band, lower band, and channel 3 low here, along with the lower Bollinger band, which is not showing, but it's at 4061.13, right around the lower Stark band right here. So Powell used his words to pull the reins in on the market participants. Now we have to see if they just blow him off again. And I would say that a close today above the conversion line, and we'll be going for more upside, especially if it can get above that 50% propulsion momentum up and close above that. That's the topping on the cake there. And the relative retracement disqualified up to at 4311.69 is still our ultimate short-term goal. And if it really does start making its way towards this level, it will surely be painful along the way. And here's the chart that really tells the whole story. The NASDAQ Composite COMPQ weekly new highs, new lows. And we mainly use this for bearish divergences, meaning the red arrows. I have put some blue bullish ones on there. And you can see the divergence building here. And the thumbnail's even better. Look at it. If you just put an arrow going that way, and the new high, new low weekly going this way, that's a bearish divergence. And the new highs, new lows, it's just going straight down. Granted, the signal line is following closely, but it's still a bearish divergence, and they can go on for quite a while. You can see the recent bearish divergence here from 21 to 22. The entire year price was getting pushed up for the big fat cap megatechs, and the new highs and new lows in the NASDAQ Composite was headed down. So we have a fledgling bearish divergence going on here, and caution flags are definitely out. And every once in a while I point out how insidious the COVID crash was. You can see the new highs, new lows here with these oval red circles here, and price fell under its signal line here, which is a 39 period simple moving average, and went sideways for about a year. And then the buy signal was given right before 2020, and everybody started pouring in to the big fat cap megatechs, and the bottom fell out for the COVID crash and caught everybody on the wrong side of the market. And then eventually it gave the signal when Powell and Company and the federal government was pumping stimulus into the markets. Free money era started around April of 2020, and the rest is history. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily baseline, trend factor down 1, ongoing demand line, and S1. Price in the pre-market hours for the S&P 500 at 6:10 a.m. on the 4th is 40.76. And to the immediate downside is the 50 EMA. The top of the cloud, 26 bars back concerning the lagging line, and the daily Bollinger Band, lower band. And the top of the cloud, 26 bars back, as we've seen in the previous videos. I think 2 or 3 videos before this was very good support. It absolutely nailed the top of the cloud, and that's when that mini uptrend run started for a few bars. And that's right around the area where the D wave up wave 4 will print. And remember that the D wave up wave 4 has already met its 61.8 Fibonacci retracement level that will validate this level when it gets hit. And that level was right there at 40.98, this weekly diamond bottom extension, perfect uptrend channel, bottom line there. So it's already validated. Now all it has to do is print, and that will put the S&P 500 on D wave up wave 5, and D wave up wave 5 is just as good as D wave up wave 3 for getting on board. But of course, caution is the order of the day. Even if it hits that, it could go a little further down. But it looks like not too far. The 50 simple moving average is around that area, 40.37. Weekly 65 EMA, the 200 EMA, and the downtrend line here And it looks like I forgot about the daily horizontal support from 07-2021. That's in the gray area also. It's needless to say that the daily AD lines for the S&P 500 and NASDAQ 100 went back below their 21 EMA signal lines respectively. And the RAC 1 is still right around zero at negative 0.70, so in the green zone, right in the middle just about. And the ATR2 is still above its volatility line, which is at positive 50. ATR2 ended the day 58.71. PPO Extreme deteriorated a little bit more, but still above the PPO level 6 at 1.67% above zero, and has to get back past 3% for anything decent to happen. And the New York traditional McClellan breath oscillator to get back to zero would require 2,091 advancers over decliners to get back to zero. It is really deteriorating, down by a lot from the previous day, as you can see in parentheses. Have a great day.